Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. Very good morning, ladies and gentlemen. I was a bit worried when the, shall I say, mistress of ceremony. It's okay. I hope that's Sharia compliant. I was worried because when she was reading my CV, that I was like, I retired, that I'm looking for another job. And I was just chatting with Bapak Subagio, Bapak Pagajan, and I said that looking at the things that we're going to discuss shortly, I feel rich, but unfortunately, in reality, I am not rich. He agreed with me. Okay, thank you very much, Hamisha, for inviting me to moderate this session today. And it's an interesting topic. We are going to discuss on the outlook of Islamic funds and asset management industry, petrodollars, cash-rich corporations, and the Muslim demographics. I always like to remind myself that I am supposed to let the panelists say their piece and not spend too much time talking. But I thought before I asked the first panelists on their views, I just wanted to, my favorite actually, but the last time I spoke at the International Takaful Summit in London, they said that my joke was Sharia compliant. This is about balance sheets. I like that. I do that, and I say that all the time, even in my MBA classes. You know, most people cannot grasp the concept of balance sheets. Especially young chaps, you know, who have no basics in accounting. They cannot see what. So, and I always like to say that balance sheets are like bikinis. What is revealed is interesting. What is concealed is even more dangerous. Okay, with that, without further ado, I'd like to, if the panel doesn't mind, I'm zooming in straight to Chiari. Let's hear from him, you know, what are your views, you know, based on the demand for the screening, for your screening products from funds, fund houses, etc. in Asia Pacific, and perhaps you want to touch a little bit on petrodollars and the cash-rich corporations, and if you have, you know, on the Muslim demographics. I think we don't have much time, that's just an hour. So, you know, you don't mind if I have to stop you, you know, when I need to stop you. Oh, yes, Jared.
Okay, great. Assalamu alaikum wa rahmatullahi wa barakatuh. So the first part is whether we should screen whether bikinis are Sharia compliant, right? So I'll have a separate discussion with him during lunch. So Alhamdulillah, as a screening provider for the funds market and capital markets, I have the privilege of working with several of you, and most of you, some common faces are my clients, like Christian and the others as well. And it is interesting to see the fund flow from the Middle East into Asia, into some of the Asian companies, all the way to Hong Kong with regards to Sharia compliant funds. So the first point I want to highlight is, yes, there is fund flow that is taking place right now, and given the fact that 10 million US, 20 million US is a sort of like a startup for a Sharia fund with some of the asset owners in the Gulf, and they are prepared to invest into the Asia Pacific ex-Japan market to see the growth of such Sharia funds. So that's the first point. The second point is all of the asset owners are very conscious about the fund being Sharia compliant. So therefore, before they give out the monies, they want to know whether the fund manager is able to meet to the Sharia requirements. And the Sharia requirements coming from the Gulf could either be you are AOP compliant, which is like the de facto standard in the Gulf, or if they have a Sharia advisor, whether the Sharia advisor's rule book can be met and will be implemented by the fund manager. So therefore, these are the sort of like two overriding principles. The asset owners would do sort of a due diligence before they pay out the money to the fund managers. The third point I want to highlight is the asset owners are pretty well glued to the market. They know exactly which fund manager in which market has got good performance, has got good track record, has got good history. It's not like You turn up tomorrow in the Middle East, in Saudi Arabia, and you ask 50 million, someone draws a check and says, here you go. That's not going to happen. And so fund managers who's got a niche market in investments, in the area of their investments, can go to them and prove your case that you have got substantial experience in what you do. And the asset owners, if they buy in the story and they want to diversify in that asset class, then you are in the deal with them. Okay? And the proof is in the pudding. So if they give you 10 million, 20 million, they want to see what are you doing with that money over a period of, say, 12 months before they reinvest into that asset class again or reinvest into the asset manager. So from that point of view, I've seen monies flowing in from the Middle East into Malaysia. Substantial amount of monies are flowing into Malaysia. And I've seen fund managers who have got regional operations in Singapore, Hong Kong, who are managing Sharia funds, and they split the operations between Singapore and Hong Kong for global Asia Pacific sort of like operations. And we are also seeing funds going into Russia for the BRIC funds on the Russian side of it. I've seen funds going into Brazil with a Brazil fund manager for the BRIC Brazil part of it, and also into India and so on. So therefore, all of this is happening. Just last week, Maybank announced some initiatives with Chinese investments, which are going to be Sharia compliant as well. And therefore, you can see how the Gulf monies, I believe it is in United Arab Emirates, who are cooperating this with Maybank, who's going to invest into China. So therefore, from that point of view, I see the fund flow. In terms of fund growth, we are now at about $80 billion in terms of, it's about $80 billion in terms of fund flow. No, I'm sorry, I think it's about $800 billion in terms of fund flow. And we are close to the $1 trillion mark just on the fund flow. And when that happens, it will be a significant sort of landmark for Islamic finance, because we started just 40 years ago. And the funds business was just maybe about 35 years ago, or maybe say 25 years ago, when Dow Jones launched the first Sharia compliant index. In terms of demographics, obviously we are waiting for Indonesia. And whenever I go to Jakarta, I make that point. I say, Bapa, in Indonesia, please try to push harder and make the Malaysians work harder as well. You have 1 billion people who are Muslims. And that's a huge population, to start the fund growth. Alhamdulillah, I have to say to you, over the 5 to 7 years we've interacted in Indonesia, when they first issued the sukuk, it was all in rupiah. We tried to educate the market to say do dollar issuance. They did the first dollar issuance, and Alhamdulillah, I'm saying I can see that they now have the appetite really get going on the US dollar sukuk issuance, because there's so much of demand for US dollar sukuk, and I see that happening. I think Bapepang or OJK just need to tweak the investment rules for Indonesia, and Indonesia will be a big fund house within the ASEAN region. The final point I want to make is please watch out for Sri Lanka. It is
why of all the place Sri Lanka?
Okay, Sri Lanka is like a hidden story. Nobody knows about it, or nobody gets to know about it. Okay. But in terms of a small minority country, their Islamic banking is much more advanced than Singapore. Their asset classes, they have got several Islamic banks with several Islamic banking products already successfully launched in Sri Lanka. And they are going to push the market further in South Asia by coming up with an index and moving forward with either sukuk issuance and also with funds coming out from Sri Lanka. So that to me is a significant and an interesting move coming from a minority country. These are the points.
Thank you, Mr. Arif. You mentioned, you touched on Indonesia. So I thought before Pak Gatot forgets about it. Maybe as for continuity, while it's still hot, maybe you would like to hear from Pak Gatot, what is your reaction to Mr. Arif's comment on Indonesia?
Thank you. Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. Well, of course, as Mr. Arif mentioning Indonesia, first thing we have to understand is Indonesia is with the highest population of Muslims in the world. Being individual, of course, everybody wants to be faithful in Islam, to be a good Muslim. Therefore, they have to do a good thing. But as a group of people, economically, they are seeking for living. They are doing economics, either expense now or investing future. So they also go for investing in the future. And then being a group, and then set up by, there is a government which has to regulate the market as to comply with the objective of the market. Well, in that sense, the question is, being a biggest Muslim country with a huge population, the question is why and how the Indonesian financial market, as well as banking, as well as the investment, has not grew much. Allow me to give you some fact on the market, so it will answer the question. Would you please? Let me show you the instrument which is available in the market. It's showing that conventional is still a higher portion of the soup, as well as the corporate. Conventional less part of the corporate part. So this is the first fact. Next. Let us go further in investment area. Mutual fund. From data I jotted down, showing that still a conventional mutual fund still have a asset under management greater than Sharia-based mutual fund. However, the growth of those investment instrument is increasing. Like they have a conventional right now on the 10.3% and the Sharia base is 16.4%. Meaning that we are optimistic that Sharia investment by the time is growing. And then if you see from time deposit, showing a better profile because having a portion of greater than the investment area and the growing of the Sharia base is huge, 44% growth average during 5 years. They show that yes, we do have a small amount of a Sharia base. However, we are growing faster than we expected. And above the market itself, in equity market, you can see that the conventional is Jakarta Stock Index is growing good, but the Jakarta Islamic Index is giving a moderate return like that. Next, this is only detail of the backup of the information. Go next. Next, please. Then, pension fund is an investor. Investor is a rational investor. The bottom line of request is how much is the return that we are making. Because you know, as a pension fund, we have to be able to grow the fund above the inflation rate. Otherwise, the capability of purchasing power of the fund will be going down. In that sense, government bond is still part of the highest asset allocation, meaning it's a good market for Sharia in the future with the growing fast with development of the Sharia. And then mutual fund is this last, but it grows. Well, in that sense, I still believe that more and more people start to aware of investing or growing their assets in Sharia. But the only thing we have to do is be patient and keep informing, keep educating people that Sharia is still better off because we are not only seeking the return, but also we have to obey the Quran. And the Quran recital can be used as a way to educate people so they are more confident to invest in Sharia. And of course, it's like chicken and egg rule. While people more moving to investment area, in equity as well as in bond, and then the market is growing. But if people waiting, so the market will not growing. That's my statement on how we grow the market and why it's still not growing. Thank you.
Thank you, Mr. Gatot Supadio, Chairman of Asosiasi Dana Pensiun Indonesia and President Director of Dana Pensiun Bank Mandiri.
Yes.
Okay, now looking at the figures that you have seen, I kind of get this draft in picture. Correct me if I'm wrong. So it appears to me that over the last like 10, 15 years, the conventional insurance, it's not growing. The takaful market is growing. Okay, and if you look at all the Sharia-based fund, it seems to be growing. But the penetration rate somehow or other it's not as good. But it is the potential there, but it's not growing. As the penetration rate, it's as growing as fast as compared to conventional. What's your view on that?
Thank you very much for the question. And I agree with this, right? The point I'm trying to highlight here, is if you look at the underlying, even the two indexes, it all reflects Indonesian investment. So right now within Indonesia, with the OJK and IFAM rules, they can only invest in Indonesia. So you cannot structure a fund which is say ASEAN fund and then invest out of Indonesia, or for that matter if you do something called Asia Pacific and you invest in some of the Asia Pacific companies and so on. This is the limitation.
Do you think that this will happen? Because everyone is upbeat, the ASEAN community thing and everybody.
Yeah, they are.
Again, of course, there are these hindrances. Again, the each nation or each country has got their own regulatory, framework. Do you think that soon there will be an opening up?
Which is why we're all reading who is Widodo appointing as a finance minister. And everyone is watching the space, what this finance minister will say with regards to opening up of the capital markets. And at this point of time, if you look at the high net cash flow in terms of investing outside of Indonesia, most of the Indonesian monies who are tracking Asian funds are being sold and managed out of Singapore and Malaysia and so on. Because Indonesians themselves who want to now invest in Asia or Asia Pacific like Japan can't do it from Indonesia. So if you are losing those sort of monies to the big fund houses who are in the region, then it's like missing the opportunities that Indonesia can provide. And I've spoken to several fund managers. They are all waiting for the minister and Bapepam and OJK to change the rules and make it easier for Indonesians to create a regional fund for them to play in the regional capital markets as well.
Thank you, Mr. Arun. Let's move, Mr. Christian Bernasconi, CEO of BNI Capital. Okay, Perhaps you may want to share with us your experiences in the fundraising activities, and the challenges.
Sure. I think, first of all, BNI Capital, we focus on Asian REIT investments. So we look across the region and we invest in REITs. So traditionally, our business is really in conventional investments. But about 2.5 years ago, we were approached by a bank in the Middle East, Al Salam Bank. And they had a project. It was to launch their first fund to invest in Asian REITs in a Sharia-compliant manner. They had a very good experience with Savannah REIT when it IPO'd. It was the first Singapore Sharia-compliant REIT. And they wanted to do more. So they approached several fund management houses, and fortunately we were selected to manage it. Again, as Eric said, performance was really the criteria. We didn't approach them, they did a selection process. They looked for the best asset managers. They also looked for someone who would be flexible, who would be able to help them raise capital. And a small firm that we are, we set up the company in 2007 with 2 people with $30 million. We've now raised approximately $300 million. It's still a very small sum of money to manage, but the industry that we invest in is also currently pretty small. Our experience so far is very similar to what Arif said about the typical sort of launch of a fund. Al Salam started the fund with $13 million as seed capital. They watched the performance. That was back, I believe, in February. Our performance so far has been roughly 9%. Since then, they've been attracting more and more money to the fund. They were actually the promoter of the fund. We help them assist in the marketing and give them marketing material, but they're actually more active in the fundraising role. So from that launch until today, they've raised additional money. The fund's now up to about $30 million and seeing consistent inflows on a pretty much a weekly basis. So we're very happy to see that, and it gives us confidence that this industry is going to grow. There are some limitations and some challenges, of course. We're very fortunate to work with IDO Ratings because they're able to help us find appropriate companies that fit the rule book that will satisfy the Sharia board of the fund. So we have very specific rules with respect to non-permissible income, purification, leverage levels. And so working with IDO, we're able to put together a reasonably large enough universe to allow us to scale the fund up. Longer term, ironically, the challenge may be that the universe today is not big enough for the money that may come into the fund. So we may indeed suffer sort of capacity constraints in the near term. But fortunately, the Asian REIT markets are growing in terms of number and market cap size. So this should give us much more of an investable universe. It's unfortunate that there aren't that many REITs that are outright Sharia compliant, but there are a few that we've invested in. And so we're optimistic. I think it's probably a good thing that it's going at a relatively slow pace, at least with respect to our niche. But again, the growth, if I look at the growth of this fund over the last few months, it's growing much quicker than our other funds had at that size. So quite encouraging.
So I take it that your outlook for the industry it's positive, right, Mr. Minister?
I am. I mean, I'm optimistic both on the industry itself, the fundamentals of the Asian REIT market. They do offer attractive risk-adjusted returns. I'll be doing a presentation on the final day that will show the returns of Asian REITs versus other asset classes like high-yield bonds, government bonds, cash, international equities, etc. And I'm proud to say that Asian REITs have outperformed, and generally with lower volatility. So going forward, we think the need for income amongst pension funds, aging populations, is only going to grow. And REITs sort of provide that income. On top of it, they also provide liquidity. And I think one of the lessons people have learned through the past few crises, especially with assets like real estate, is that liquidity is very valuable. And the REIT industry sort of solves two problems, both the income and the liquidity problem.
Thank you, Mr. Bernasconi. We have not heard now from Dr. Tabisha Abdul Karim. I hope I'm not contravening any gender diversity rules, but it's It's not that I deliberately leave you, to speak last. But now let's hear from you. What is it that some of the things that you feel, the demand from philanthropists, okay, wanting to set up Islamic trust funds in Singapore. I just want to be specific with you. And the need for more products in order to make the funds work. So how do you look at all that?
Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. Yeah, we heard a lot about making money, investment. These guys are doing very well to create more income.
So now you want to remind them, don't forget the philanthropy part.
So, well, you have many billionaires, millionaires around the world, and they are not just looking for profit again, but return in the hereafter. So philanthropists, especially Muslim philanthropists, you can see people like Bill Gates and that they set up foundations. They set up a lot of charitable trusts and so on. But what is lacking right now, I'm seeing all over the world that the Muslim philanthropists, especially, they have limited products and legal framework that is available for them to actually go into such foundations and so on. Of course, they have set up their own foundations. We have like in Turkey where we call a foundation where they set up a lot of charitable trusts and so on. But again, coming back to Singapore, how do we then attract Muslim global philanthropists to set up their funds here? We have, which I will share as well later in the afternoon, on the creation of Wakaf, which we see that people from, a lot of them from Hadramis, from Yemen, they came to Singapore, set up a business here and created philanthropies, what we call as a Waqf. So they created a madrasa, they created many things for charitable purposes. Again, the framework and the governance is concentrated under the Administration of Muslim Law Act. It's not the Anti-Money Laundering Act. Rokila was telling me, it's the first time she heard Anti-Money Laundering Act, because what we know in Singapore is the AMLA, which is the Administration of Muslim Law Act.
Oh, you don't have an AMLA here?
We have AMLA, but it's on Muslim law.
In Malaysia,
they call it Anti-Money Laundering Act.
No, there's two. There's AMLA, Anti-Money Laundering Act. The other one is Association of, I think, Justice or something like that.
Oh, Justice.
AMLA.
Oh, okay.
Sorry.
Our AMLA provides the governance and framework for a trust, a Muslim trust, and Wakaf to be created in Singapore. But I think there's also limitation. That's where I think there is these challenges of attracting philanthropies towards creating a wider spectrum of Islamic trust in Singapore. So while you know that MAS, Monetary Authority of Singapore, they regulate in terms of the trust in Singapore. So you have the Trustees Act and so on. But there is this lacking of the Islamic trust element in the legal framework, in the governance, and in the product that is going to be offered by the philanthropists. So I see some of these philanthropists, especially the Muslim philanthropists, they created trust but in a conventional system. So they will tell the fund managers that, and people like Arif, maybe you can advise on what are the products that they can buy. But apart from that, the whole holistic management of the Islamic trust itself, for example, the elements of zakat, the elements of other Sharia injunctions that they have to comply with are not met. So it's not a holistic system. If we have a proper governance, if we have that framework, I think Singapore is set to be the global philanthropic, Muslim philanthropic hub that they can create. This is another area, and to do that, there is also the chicken and egg problem, where there are not enough products, Islamic products that they can invest in. For example, what we did in MUIS itself, we have this cash awqaf, which we recently created last 2 years. We find Islamic Sharia product that is in compliance to manage the fund. So there are certain restrictions which I will share again later in the evening. What are the investment challenges that we have to meet up in terms of investing? While we want capital preservation, we want certain income. And I tell you, the philanthropists are also, they are all businessmen as well. So they want the best return.
The keyword is return.
Even charity, they want high return. High return so that high return will go to the beneficiary. High return for their pahala or the tawab in the hereafter. Right? So that is the requirement that they impose on the trust that whoever is managing for them. So I think there is this huge opportunity that Singapore being a financial hub, being very strong in its governance and so on, it can attract Islamic philanthropists to create trust here.
Thank you, Dr. Samsyah. Now, so you did not make any comment about the scenario of the industry. I mean, I take it that you're more focused on the niche part of the Porter's generic strategies. You're going for the niche, you're going for the philanthropists.
Like I mentioned, the scenario is that there is like Islamic finance 50 years ago, and people doesn't know what is Islamic finance all about, what is this riba all about. But Islamic trust is something that people doesn't have the knowledge as well. So they do not know that there are ways for you to do your charity in a different form, in a trust form. It has always been a conventional system, but just to give a bit of history, actually the Islamic trust started from the institution of wakaf, where from the history of Prophet Sallallahu Alaihi Wasallam, where wakaf was created by Sayyidina Umar. So these are again history which already shown that these are already done. But along the way, we get distracted maybe, or we are not sure how to do it, and it gets stagnant. And there's no progressive movement to create that environment of Islamic trust.
Okay. Now, I was just wondering whether the audience is allowed to ask questions. Yeah. Okay. Perhaps if there's anyone in the audience who would like to ask the panelists before, otherwise I'll we don't have much time left. What do you call? Is there anyone who would like to ask, please? Yeah. Oh, okay. Bapak nak comment? Okay. Yeah. Before that, we will let.
As a pension managers, the same as other pension managers, our objective is to provide some assets or some cash for the future life of people, which means giving a good support for people who are not working. And when the Quran recites the concept of Sharia, we kind of close to interest or using interest as your return, and then basically it's conflicting thing for pension manager. As a portfolio managers, we create a portfolio which combine equity, combined as a bond, combined as a time deposit, which some of it is investing in a conventional, and the Sharia part is only 5%. And then I was so sad that those old people will receive pension income, which coming from part of it,
conventional,
which is interest based.
Which is not Sharia compliant in a sense.
So,
yeah, okay.
how we reduce this thing? Of course, first thing is market should grow. And what I'm expecting is that rich country, which is having a billion of fund, please investing in a emerging market. You call it emerging market.
Okay.
I was shocked that under Mr. Iksan criteria on GCG, Indonesia is not a part of the list. So how can we expect that you're willing to grow the Sharia basis if there is no enough investor to support the market? As I said, chicken and egg. So, do you really committed to grow the market with the Sharia concept, which you have to allocate some of the fund to the market, which means you could invest in equity in a bond. You could invest in government bond, Indonesian government bond, or corporate bond, which eventually will grow the market. And then people start to convince, oh, this market is growing up, and the market giving you appropriate return. I might not say the maximum return, because we can debate on this terminology of return, whether preserving value, meaning that investment should higher than inflation, or maximizing return, which is trying to maximizing your return. This is something that we have to talk about it and trying to solve it.
Yeah, but maximizing returns, if you ask me, is you can, but maximize your returns within the confines of our understanding of what Sharia compliance is. So I think if all of us understand that and do that, I don't think it will in any way compromise the maximization of the returns of the calf. Sharif, do you want to comment anything? I think we all agree that the outlook is promising. Yeah. Before I introduce another new element, just to sort of round up our discussion this morning. You want to say something?
No, I think.
Now I was about to ask some, I wouldn't say naughty, but maybe because some part of my life I spent in IT as well. Interesting. Just before the session, I was chatting with Mr. Rosconi. That today, with the current technology, with the way of living, especially IT, today we're talking about big data, we're talking about analytics, we're talking about algorithms. The algorithms, and in the handphone that I have, my smartphone in my jacket, it's so advanced, it's even more superior than the same software that was on that spaceship that took Buzz Aldrin to the moon. That's the kind of speed. And then there's a new, what do you call, even artificial intelligence has advanced so much. And soon, you don't need people actually to do all these investments. What is your, how do you think? What is the panelist's view of it? It's already happening, in the US. Yeah, some things are not done by people.
Okay, I'm challenged by my throat.
Okay.
So 2 points, okay? Firstly, I think we are covering that session tomorrow.
Oh, okay.
On trading
I'm
strategies.
preempting it, no, right?
You preempted it a bit. But nevertheless, I won't get into the trading strategies discussion now.
Okay.
But I want to touch on the other point that you also raised, which is given that we have now progressed so much in technology, how much are we using technology for Islamic funds? That's a bit about the presentation I'm going to do after this session.
I see, okay.
But I wanted to just maybe touch on the difference between automated screening versus research-based screening as a precursor to the presentation, by touching on this particular point. And I want to highlight to the members in the audience that whilst the notion that we've got so much of technology and we can put some rules and into the intelligence of the computers to try and help us do things better and faster, because of the fact that the data that we have with us on, say, listed companies, on Sukuk, on REITs, much of the data is hidden. And so when I have, like, Christian and I are client, he's a client for me.
Okay.
And just like Alan is as well. So many of the things that Alan had highlighted with regards to companies and income from non-permissible sources, it's very much hidden. And it's not hidden because companies want to hide, and maybe there are some companies that want to hide. The part of the problem is the accountants, right? Because the accountants that are publishing information of all listed companies are publishing it in conventional terms.
Right.
And they make their lives easy, where they take Islamic financing and they do not know how to create a new accounting code for this, and then they're going to lump everything under the conventional financing. Okay. So the fund managers, like everyone in this room, have to strip the numbers to know which of these numbers is Sharia financing and which of these is conventional. And treat the conventional as conventional and treat the Islamic as Islamic. And this is the challenge. And so let me give you an example. Louis Vuitton as a company.
Okay.
Okay, if I say Louis Vuitton to you, what's the first thing that comes to mind as the business of Louis Vuitton? Just give me
the scary handbags.
the handbags, right? All the accessories. Everyone knows Louis Vuitton in terms of accessories.
Okay.
Not many people know that they have an alcohol business that contributes like 35%
to their overall
which is the
revenue.
MH part of it, which contributes to the company revenue. And the 35% makes it non-Sharia compliant. And so therefore, this is the sort of thing that we are having to work. The problem in automated screening is that, like Dow Jones and MSCI and all of the index providers, we screen based on industry codes. So therefore, if the industry code for Louis Vuitton is 1010105555 because it's an accessory company, and alcohol companies are 3535111, and so we screen them out, Louis Vuitton would pass as an accessory company. Whereas if you went to dig further, then you say, okay, it can pass as an accessory company, but the income on alcohol is substantial, and we will then have to remove it.
Okay.
So that's just the tip of the iceberg, and I will just...
Thank you, Chair. Sorry, I see I've inadvertently opened up the Pandora's box. Let's come back to the outlook for the Islamic funds and asset management industry. Anyone from the audience would like to ask questions to the panelists, please? Or make a comment before I more or less round up our session this morning? Please? Yes, sir.
I've noticed with technology in my work, there seems to, where there was in the past a strict dividing line between various sectors and subsectors, but now with technology, let's say intuitive surgical, we know it's healthcare. That is the nature of the company, that is what it does. But it's also robotics and computers where surgeons can operate from 3,000 kilometers away. When it comes to screening and automatic screening, what Reece says I can't endorse more highly. The problem with technology and with Sharia compliance now, and what I'd like to put to the panel, technology should be helping us. Is technology in fact making our life, especially in the Sharia compliance space, more difficult?
Anyone want to handle that?
I kind of just follow on with what Arif said about the process, sort of looking at companies, and we see it on a daily basis that, of course, technology allows the companies like Dow Jones and others to screen out initially on a first cut whether a company is compliant or not. But then this is where the human factor really comes in. We as fund managers know the companies. We'll go to the research analysts of ideal ratings and have them directly approach the company and get the actual granular data as to what they're actually doing and selling and where the income's coming from. And that's very much a human thing. And it's going to continue to be like that until companies report. There are a few companies, one in Australia comes to mind, that actually produces and posts on their website their Sharia compliance. Even though they're not a Sharia compliant REIT, they have a very high leverage. They would qualify under our rule book. But nonetheless, they provide that data. But for the most part, it is really a process which is quite human, and I think will remain so for the time being, especially given, as you said, about balance sheets and other things.
Okay. Thank you.
I don't think that answered your question.
Any other remarks, any comments from the audience? Please. The only thing that's in between, yes please, I was going to say the only thing that's going to be between you and lunch is me. Sir, can you identify yourself please?
Yeah, my name is Errol from Invest Malaysia.
Okay.
Initially I want to ask about your economic outlook on fuel prices, with $80 per barrel. But since we're talking about screening, it's much more interesting.
Oh no,
I skip again. Okay, we're talking about technology to help, people to screen the companies. Yes, I agree with two of the gentlemen, Mr. Arif and Ms. Gani. We cannot let out human intervention in Sharia screening. It can, IT or technology can help you to speed the process. Before this I worked with the Securities Commission of Malaysia. We are the one who screen the company. In Malaysia it's a different style. Okay, I think Malaysia is the only country who do the screening of listed shares at the national level, meaning that the regulators is the one who screen the companies. Right? So, and then there's one thing I will highlight, and then I need your opinion as well. There's one criteria, besides all these quantitative criteria, you're talking about all this leverage, you're talking about the activities and non-permissive activities. There's one element which is technology cannot do it, which is the screening of the image of the company, which is very crucial in Sharia screening. I don't think technology can do this image criteria thing, to make a decision. We still need a human intervention in order to come up with a fatwa to say that this company is halal or haram. Take for example, I think everybody, most of people here know about what happened in one of the airline company, because if you calculate in terms of the level of liquor contribution for this company is very low. We do 1%. The benchmark is 5%. But because the image of serving liquor for free in a flight, that triggers non-Sharia compliant, which is, I think, technology cannot do it. We still need human intervention in the screening. And the other thing is I want to highlight in terms of technology and when you do screening. Yes, Mr. you're right, Dow Jones, they do it based on the whatever publicly available information. But in terms of Sharia screening, there's still listed shares. Some of the information is not in the annual report. You need to dig further. You need to dig further in terms of the contribution, which is private screening provider cannot do that. Regulators like SC, I'm not pro SC or whatever. Just want to give an example, an idea. Regulators have power to ask and dig further. Let's say, for example, listed company in Malaysia who have a subsidiary or associate company in Taiwan. Who knows what is their contribution? For example, the Taiwan company doing gambling activities. This is not available because sometimes associate companies it's not available in the annual report. But as a regulator, they have power to ask the listed company, hey, what is your contribution? Your associate company, the share profit in Taiwan who's doing gambling, which is normal, private everywhere, people like you and me as well. We cannot do that. So my point here is, I don't know whether panels agree with me or not. Human intervention is necessary, but regulators' role here in order to make sure that the Sharia compliance is legitimate and valid is very important as well. Thank you.
Thank you. Anyone would like to respond to that? Yeah.
Okay, of course I came from a unique quality management. We have already utilizing maximum as a tool. But my concern is about the first is regulation. As long as you make a regulation and it's communicated quite well, I think the regulation will overcome the problem with IT. Yes, human intervention still we need it because IT is just black box, processing. So at the end of the day, finally, we are the user and we analyze and we also like discriminate the data with whether it's appropriate information or inappropriate information. The other thing for things to be improved is accounting, as Mr. Alif said, because the clear-up of accounting. Like GAAP or IFAM or something like that, giving you confident that, oh yes, this income is coming from this part and this income from a non-compliant or something like that. For example, like mark-to-market under IFRS rule, when we implement mark-to-market, we are sometimes facing unrealized loss, which is not benefiting for the pension. I mean pension business. So when the people goes pension at the market under pressure, and then they have to be mark to market, and they receive like less benefit. So it's more on a accounting and on regulation, clear regulation. And the final question, whether this Sharia concept able to cover the risk of market like that, because at the end of the day, we still following financial statement which is under conventional basis.
So my quick comments on the brother's point is this. I think from a Sharia point of view, image is not one of the points to consider. So therefore, you will never find a Sharia scholar who says that the image of the company is important to determine whether it's compliant or non-compliant. The Malaysian Sharia Council is the only one council in the entire world that has determined that MAS is not a Sharia compliant. All the other Sharia advisors have said that the objective of an airline company is transportation from point X to point Y. That's the main business, whether it's goods or people in terms of the transportation. And the income that they earn from alcohol has been proven to be small percentage, less than 5%. Under the Sharia rules, anything less than 5% is non-permissible income that can be cleansed out in the investment, but the company can still be invested. Okay, so that's the first point. Second point is, with regards to image, the reverse too can be the truth. And I'll give you an existing current debate that's happening in the Middle East, in Saudi Arabia right now, which is NCB, National Commercial Bank. And you know, National Commercial Bank is equivalent to, like, say, the DBS in Singapore, right? It's a long, traditional bank in Saudi Arabia, and they have just gone public. So the big question mark is NCB Sharia compliant? And this is the debate and discussion in the whole of the Gulf, and people who are in the Gulf will know this. And the issue is, as an image, everybody wants to have NCB in your portfolio because it's, image. Right? It's like having a DBS in your portfolio. But it has a conventional banking. And so now the big discussion is, how can you approve a conventional bank to be Sharia compliant? Logical sense will tell you it's not Sharia compliant. To come around this problem, the NCB directors have made it a point that the future, in terms of what they want to do, is to make it a truly Sharia compliant company. So the big question mark is, should you invest in NCB right now as a Sharia compliant company, or wait until it becomes Sharia compliant? And this is the discussion. So therefore, image has got no bearing in it. It is the underlying business that need to be looked at in terms of whether it's compliant or non-compliant. The first one. Second point you touched is very interesting. What Malaysia is able to do from forcing the listed companies to publish comes to what Alan highlighted in his first presentation, disclosures in the market. And quite interestingly, AOP has a set of disclosures that companies need to provide, fund managers and the companies as well. Now the interesting point is, those disclosures are very much available in non-Islamic jurisdiction. So say for example, you take a listed company in Australia, as Christian had highlighted, they would highlight, for example, a food operator, like say cold storage. They have the likes of the cold storage, which are listed companies, and you can know how much of income is coming from pork, alcohol, all the non-Sharia compliant sources. But you take the same company and you look in the Islamic countries, you have to dig and you have to go and ask the CFO, can you please tell me how much of your income is coming from food and alcohol? And this is the problem that we have. The companies in Muslim countries, the disclosures are not as good as those that you find in the Western countries.
Thank you. Saya akan baca Bapak Datuk Subadil just whispered to me, and very interesting. The next question is, are we going to compromise all these issues that were raised? It's my fault actually. I should have just stuck to the outlook of the Islamic fund and asset management industry, and we agree that there is I wouldn't say light at the end of the tunnel. There is what do you call? Can I say that, Charlie? A very interesting hope for the industry.
Inshallah.
Yeah, inshallah. Yeah. And I'd like to thank the panelists for very insightful discussions, and our brother, yeah, for your comments, sir. I like that silence before I finish off. Thank you very much, Arif Sultan, Regional Director of Idle Ratings, Christian, yeah, for sharing your, the challenges in what you do, and Dr. Samsyah for your views on the philanthropy part of the Sharia compliant market, yeah, and Bapak Gatot Subadil for sharing, yeah, the pension man and what it's like in Indonesia. Thank you. I have enjoyed moderating this session this morning. Thank you again, ladies and gentlemen. Like I said, I am the only one that's between you and lunch. So with that, wabillahi taufiq warahmatullahi wabarakatuh. Thank you very much again, distinguished panelists and ladies and gentlemen.